Hello and welcome to a cmsfx daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Monday, September 27, 2010. Generally, it was a pretty quiet day in currency markets in that we had mainly tepid movements in our majors. In our euro-dollar pair, which we are looking at now, we see that the euro had slumped slightly as a result of Moody's downgrading the debt of Anglo Irish Bank, creating some fresh concerns about sovereign debt worries. And we see that we touched the 1.3430 level as a result. However, pretty quickly we saw the euro rebound and move above the 1.35 level, setting a fresh 5-month high for the pair. So while we have some nagging signs about European banks and countries such as Ireland and Portugal, we see that the dollar remained on the back foot as a result of the signals sent to the market last week by the Fed, as it said it was ready for more quantitative easing. So since then, we've seen the pair break above the 1.3150 level, then the 133 level, and now we are testing the 135 level. Now, late in the New York session, we did see the greenback gain a little bit, moving back down to the 1.3430 area, as there was a report that Federal Reserve officials are considering open-ended, smaller scale bond purchases rather than massive bond purchases with a finite end, and this was reported by the Wall Street Journal. So that is a bit of a change from the expectations that had dominated last week's thinking, which centered around a larger, bolder bond purchase scheme. The article also said that there's still some disagreement between the Fed policymakers, so we'll have to see how this story develops going forward. Taking a look at the pound-dollar pair, we see that we managed to move a bit higher, but for the most part we consolidated the gains that we had seen in Friday's session. Here too, some weaker housing prices data from the UK, which was pound negative in the overnight trading session, did not deter the pound from gaining on the dollar and moving above its highs from Friday. The Australian dollar US dollar pair, meanwhile, rose as well, breaking above the 0.96 level, which was near our high from Friday's session as well. We moved as high as 0.9640, but then we did see this move back in favor of the greenback following that Wall Street Journal report. Overall, though, we remain within a bullish rally in this pair, and we'll see if we continue this trend throughout the rest of this week. The only currency really not benefiting against the US dollar was the Canadian dollar, as the US dollar Canadian dollar pair fell first to touch the 1.0220 area, but meeting support, which we see this level has acted as support several times during the past few weeks. We see the pair rallying back into the middle of this trading range that we've been stuck in also for the past few weeks. Now, we did have some weaker oil prices and some increased speculation that the Bank of Canada will hold interest rates steady in their next interest rate meeting following some soft data that we had seen last week. Finally, taking a look at the US dollar Japanese yen pair, we see that the pair edged down today in favor of the yen, testing its lows from Friday's session. Data from Japan showed export growth slowing, likely as a result of a cooling global recovery and a higher yen. The government also proposed some stimulus measures worth around $55 billion, but as we can see, traders remain cautious with this pair as they don't want to be caught on the wrong side of further intervention. So with the general dollar weakness, the euro underperforming slightly because of the downgrade to Ireland's troubled bank, and the Canadian dollar's inability to gain on the greenback, there wasn't really that much to go on. Since it's Monday, let's then go ahead and take a look at the upcoming week of US fundamental data. While most of the key releases to look out for come at the end of the week, we do see the Conference Board Consumer Confidence Report coming out tomorrow on Tuesday. The September reading is expected to come in at 52.5, down from 53.5 the month before. We'll also get the final version of the UMich Consumer Sentiment Report due out on Friday, and is expected to rise a tad to 67.0 from the preliminary reading of 66.6. The story here is that despite modest job creation and economic growth, consumers remain worried about both current conditions as well as the future. These worries are magnified by weak hiring and continued high unemployment. We get a better sense of what consumers were up to in August from our personal income and spending data, also due out on Friday. Here, expectations are for consumer spending to have risen 0.4%, matching the figures we had seen in July. Incomes are expected to grow 0.3% after a 0.2% increase in July. Meanwhile, the Fed's preferred inflation measure, the core personal consumption expenditures price index, which isn't actually listed here, is seen rising by 0.1%, the same amount as July. This personal income and spending report, therefore, will show some modest forward momentum to go with the tepid consumer confidence readings we'll be getting from the Conference Board and the UMich surveys. Also, we'll continue to see that we have faced negligible inflation. Thursday, markets will get to see the third revision of the U.S. second quarter GDP data. However, here, forecasts don't see much movement, with the GDP number again coming in at 1.6%. Finally, on Friday, in addition to our data on consumers, we also get the measure of manufacturing activity, the ISM Manufacturing Index. It's expected to show a modest expansionary level of 54.3, but that will be down from the previous month's 56.3. The ISM is a timely, forward-looking indicator, and it's been fairly strong the past few months, so if there is a big downside surprise, that could get people worried. Overall, this week's data should point to steady but rather unimpressive growth, with data on the downside pointing to a more likelier chance of Fed opening up the spigots for more quantitative easing. Having said that, let's take a look at the upcoming fundamental docket for our global session. Overnight, we get to see data from Switzerland, its consumption indicator, as well as consumer confidence data from Germany. That's followed up by several reports from the UK, including current account, the final version of GDP for the second quarter, revised business confidence spending, as well as the CBI realized sales, a measure of retail sales. Tomorrow, from the US, we get the aforementioned Conference Board Consumer Confidence Index, but we also get to see housing prices in the form of the S&P 20 City House Price Index, as well as the Richmond Fed Index. And that will do it for today's video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.